Oh, another idea I want to cycle through here is on the monthly. What would be the worst case scenario? I'm not saying it's going to happen, but how do we prepare in case, shit hits the fan and the macros are super bad in the next few months? Recession hits. You have the war in, with Ukraine, Russia, maybe moving further past Ukraine and going to, I don't know, the EU or other nations around, right? Sweden or Finland. I don't know. Just throwing an idea. And the tech bubble is much worse than anticipated. Stagflation hits. What do you do from here, right? What could be the worst outcome? Well, nobody wants to tell you about this, but if you assume that we did top at 69,000, right? 400, and you do a drawdown similar to the previous from the previous all-time highs on the Bitcoin bull market or mega bulls, right? You're looking at 84% drawdown from the all-time high. And that's my orange area here that I put for each one of them. We can come very close if all the models that I presented to you are invalidated. We can come very close to maybe, coming down 84, 83% and hitting that orange box, especially if there's a crash on the equities further down. And you're looking at 12,000, could be 12,000 to 9,000, as it's kind of, it never happened before, but never say never. You never know with this kind of macros where we're at, right? We're truly in unprecedented times, guys. So this is just to keep in mind. What if everything is, all these cycles do not repeat anymore, and if we do something different here? All right, so that's something to keep in mind. 12K to 9K, and there's a CME gap here at I'll overview those gaps in a bit. There's one gap here at 9,500. Doesn't need to get filled, but that could be something else to look for. And this is a strong support here from years ago. So, all right, guys, here's the weekly and long-term technicals. Let's dive into it. This is a weekly Fibonacci channel chart, and as you see here, I have some Bollinger Bands. Just to show you here, the weekly Bollinger Band, mid-band, is at 38,000 roughly, give and take. Typically, that's once we break it, you stay below it, it pushes us down as a resistance. And I think for the next 3 to 4 months, as it moves lower and lower, it will be our resistance, right? And chances are, if we test it as it moves lower and lower, it will get rejected at least one time. Now, there's a possibility that we go down deeper before we back tested it, so that's something to keep in mind. Now, the key takeaway from this chart is, if you look back here in 2013 top, mega bull top, and you see the bear market has started and went down. We back tested that Fibonacci line, and that was the bottom, right? Now, if you fast forward till 2017 top, 19,000, same thing. We topped there, hit resistance, went down, chopped for like a long time, and close to the end of the year when you're tax harvesting, we flushed down and hit that bottom roughly at 3K, 3.3K, 3.2K, which is 200 weekly moving average as well, right? So you see here, we hit that line exactly to the point. And fast forward to now, assuming this was the, we topped roughly around here at 69K, give and take, that line brings us a bottom somewhere. If we flush down, and next week or the week after, it will move lower, but we're roughly looking at 22,600. If it's a week after, then we're looking at tagging at 21Ks. So yeah, now if we lose that, then we'll dive deeper, and then we'll reevaluate. But it looks like so far 22K is the magic area to load up at. Should it go back down?